It's been a pretty wild week for Canadian markets, with the TSX posting its biggest single-day percentage drop in about 18 months. That was yesterday. Our next guest says December is a month of erratic moves anyway, driven by liquidity. Diana Avigdor is Vice President and Portfolio Manager and Head of Trading at Barometer Capital Management, and she joins us now to explain what's fueling the sell-off and why January is really the most critical month for strategy. Always great to see you, Diana. Thanks for joining us.
Thank you very much.
We're in the midst of tax loss selling. We also certainly have caught the attention of foreign investors. Which piece would you say is the most important piece of fuel to what we're seeing in this sell-off?
I think that we all can feel the fact that what happened with OPEC 2 weeks ago is what fueled this last big decline. But energy has been on a deteriorating relative strength since the summer. We've been talking about the fact that this is an underperforming sector relative to some other sectors for quite a while. And now it's almost like the globe is selling Canada. What we've seen on trading desks yesterday was further deterioration and further selling, even at the lows of the day. And this is following a carnage on Monday. The call was that those that did not sell on Monday, hoping for a rebound, got a very small rebound and threw in the towel. We have global investors using Canada as a beta play. And when that beta is not working, in addition to some redemptions that ICI reported this morning, you see that money is coming out, and there's a halo effect across all sectors as it's a Sell Canada theme.
And your portfolio has reflected these rather long, or at least historically lower oil fundamentals, and I think you've gone from about 40% energy weight back in July. Now you're under 10.
Yeah, we've been talking about the deterioration of the energy sector. Not that there were no profits in it still, because at some point back in the summer there still were, but it was deteriorating in relative strength as other sectors starting to race ahead. So like U.S. consumer, even U.S. financials relative to the Canadian financials, technology. There were so many other sectors that were working, and while energy was still chugging along slowly, it was deteriorating. Once our models show deterioration, we simply do not, at the very least, put new money into it. And we're very disciplined in rotating out of what's not working, even if it is slightly up, into something that's working better. So yeah, we've gone from 40% energy in the summer to less than 10%, and that 10% is made up of the companies that are least sensitive to the price of oil, more on the theme of volume, so pipes and infrastructure. But if the carnage continues, we won't mind getting fully out of those as well. Weights have been coming down already, and the financials too. Canadian financials, as they related to the U.S. financials, you're seeing a deterioration of relative strength. So we have, while we still have a few percent, we have slowly rotated into U.S. financials as well, consumer discretionary and so forth.
In the last couple of months, it's been bank earnings, and BNN's been speaking to some of the CFOs, some of the CEOs of the banks, and certainly put the question to them, how exposed are you to the energy complex, and in many cases that was sort of through the loan portfolio. But it's also the banks and their books themselves, the way they're trading what they own, isn't it? I mean, what sort of sense do you get from the Canadian banks of how they're exposed on their trading book side and also on their loan exposure?
So they're not going to tell you the risk on the trading side, certainly. That only comes out in the earnings, sort of. And how things are defined in terms of risk, or sometimes some define it differently. Governor Poloz yesterday talking about the housing market being overvalued, I think he said 20-30%, doesn't help. Also, you recall this past year we've had investment banking deals. These energy companies have come to market and have raised money, and it's been very attractive raises at the time. I'm sure that the banks have participated either through investment banking or positioning. I'm not sure. Can't speak for that. But it certainly brings up a point that risk to the sectors come in different ways. It could be through direct trading. It could be through losses in investment banking business. It could be through housing. And for Canadians, it's so interconnected. Say, for example, how it relates to jobs in the sector, as it relates to the energy patch and all the employment and all the housing it's supported and all that. So it's very correlated. Unfortunately, Canada is very leveraged to this. Merrill Lynch put out a note on December 5th talking about the global boom to the consumer from lower energy prices. Well, that's $1 trillion. It's fantastic to the global consumer, but we still need to take the pain of the interconnections.
Well, how do you position for the global consumer? A lot of people saying if you're paying less at the pumps, you've got that money in your pocket and you can spend again on consumer discretionary.
Right.
You think going through sort of December and into January that if there are dips on the consumer, U.S. consumer exposed side, that those might be buying opportunities?
So that's right, exactly. December tends to be erratic, both in terms of closing books and liquidity perspective. So anything that's counter trend, anything that moves counter trend would be a buying opportunity. So if consumer comes down, would be a buying opportunity. If the US dollar sells off, it would be a buying opportunity. If energy rallies, it's a selling opportunity. If gold rallies, it's a selling opportunity. So anything that's counter trend in our perspective. Asset managers are a strong sector. Insurance in Canada could be bought on a sell-off, and U.S. financials on a sell-off. But the counter trends, if they move that way, would be the buying or the selling opportunity.
Okay, so investors can watch for those. Diana, thank you so much for joining us.
Thank you very much for having me.
That's Diana Avigdor. She's Vice President, Portfolio Manager, and Head of Trading at Barometer Capital Management. She joined us from the TSX.